All right, in its December 31st year 8 balance sheet, Herbie Co. reported accounts receivable of $100,000 before allowance for uncollectibles of $10,000. Herbie Co. had the following additional information for year 9. They had credit sales of $280,000, they wrote off bad debts of $10,000, and in the past, 4% of credit sales are uncollectible. In its December 31st year 9 balance sheet, what amount should Herbie Co. report as its allowance for uncollectible accounts receivable after the provision is made for bad debt expense in the current year? So before we dive into this, let us ask, what is it that they're asking for? So in any trade receivable type question related to the allowance method, they're generally either going to be asking you for the balance sheet balance, meaning the ending balance of the allowance for accounts or uncollectible accounts, or the bad debt expense that is going to increase that balance in the current year. So in this case, they're asking for the allowance for uncollectibles in its December 31st year 9 balance sheet. So this is going to be the end of the year 9 balance of accounts or allowance for uncollectibles. So because we are talking about our allowance, we should note that our ending year 8 allowance is $10,000. So that's going to be what? That is going to be our beginning balance. Additionally, what we also need to note is that 4% of our credit sales are uncollectible. So this is determining what? That's telling us that our bad debt expense for the current year is 4% of our credit sales. This is also going to be known as our percentage of sales method. And that is going to be used for calculating our current year bad debt expense. So our beginning balance is $10,000, and we want to know our ending balance at the end of year 9. So what is going to impact this calculation to get us to our ending balance? First and foremost, we know that 4% of our credit sales is going to be what's impacting our bad debt expense. We know that our bad debt expense increases our balance for our allowance for uncollectibles. So bad debt expense. So we know that's going to be 4% of what? Of our sales. So 4% of 280,000. So we're going to have to calculate 280,000 times 4% to give us our bad debt expense for the current year. So that's going to be 11,200. So we now know that we are going to be adding. So we're going to go ahead and add that bad debt expense to increase our allowance balance. And last but not least, what do we have left? We have our bad debts that are written off. So these are going to be subtracting out from our allowance balance. This is essentially saying that we're giving up on these bad debts. We don't think we're ever going to collect them anymore. So therefore, our allowance is going to have to be reduced. So now we can go ahead and calculate this. 10,000 plus 11,200 less that 10,000 again from our bad debts we're writing off. Happens to be the same as our beginning balance. Our ending balance is therefore going to be just the 11,200. Has nothing to do with the bad debt expense calculation. It is just kind of a coincidence that our bad debts written off happens to be the same as our beginning balance. So don't let that confuse you.